Welcome back to Explain the Charts, your go-to source for in-depth market breakdowns. Today, August 3rd, 2025, we are zeroing in on the EURUSD currency pair, which has seen some dramatic movements fueled by recent economic news. The latest headlines, specifically from FX Street and investing.com, highlight significant weakness in the US dollar. This is largely attributed to a disappointing U.S. jobs report and increasing market expectations of further U.S. interest rate cuts, a strong fundamental bearish signal for the dollar. Conversely, the euro has gathered impressive bullish momentum, with reports indicating EURUSD has rebounded to 1.1550 and is currently trading around 1.15853. This represents a substantial 1.5% increase in just the past 24 hours, signaling a powerful shift in market sentiment. Let's turn our attention to the charts to see how this news is translating into price action. First, on the one-day chart, we can observe the broader landscape for EURUSD. Looking back from March 2024 to today, the pair has generally been in a gradual uptrend, consolidating around certain levels before pushing higher. Notice the strong bullish breakout starting in early 2025, especially from lows around 1.02 to 1.03 in January. This indicates a sustained buying interest that has been building over several months. The most striking feature is the very recent price action, specifically the large green candle from August 1st, 2025, closing at 1.15842. This powerful move confirms the news reports of the euro surge, as it not only reached but surpassed the forecasted 1.1550 rebound level. The 1.1550 mark, previously a significant resistance, now becomes a critical new support level. A sustained close above this level reinforces the bullish bias for the short to medium term. Also, pay attention to the increasing volume on these recent bullish candles, which lends credibility to the strength of the breakout. Now, let's look at the shorter time frames, specifically the 1-hour chart. It's important to note that this hourly data ends on July 17, 2025, and therefore does not reflect the immediate, news-driven surge that we just discussed on the daily chart. However, this historical data is still valuable for understanding the typical behavior of EURUSD in a more granular time frame. Looking at the period from July 15th to July 17th, we can see periods of relative stability followed by swift movements. For instance, around July 15th, after some attempts to break higher, the pair experienced a sharp pullback from roughly 1.168 to 1.159. This demonstrates the inherent volatility in the forex market and the potential for quick reversals, even during a broader uptrend. Traders should use this to gauge the speed of corrections and the importance of timely exit strategies. Identifying historical minor support levels, like the 1.159 area on July 15th, shows where buyers previously stepped in. Moving on to the 15-minute chart, we gain an even more detailed perspective, though again, this data concludes on July 31st, just before the latest major news. Analyzing price action from midday July 30th to late July 31st, we see the very short-term swings and consolidation patterns. Notice how on July 30th, EURUSD traded within a tight range around 1.155 before experiencing a notable decline down to 1.142. This type of intraday movement highlights the constant battle between buyers and sellers. The significant drops, even within a day, underscore the need for tight risk management when trading EURUSD on these smaller time frames. Small candlestick bodies indicate indecision, while larger ones, especially with high volume, point to strong directional moves. For current trading, you'd want to see real-time 15-minute data to confirm the strength of the breakout above 1.1550 and identify precise entry or exit points. Observing how price reacts to new intraday highs and lows is crucial for short-term traders. So, bringing it all together, let's consider the arguments for bullish and bearish scenarios. From a bullish perspective, the fundamental news of US dollar weakness, driven by a weak jobs report and anticipated rate cuts, provides strong tailwinds for EURUSD. The daily chart confirms this with a decisive breakout above the 1.1550 psychological level, suggesting strong buying pressure. If the price holds above 1.1550, it solidifies this level as new support, making further upside more likely. On the bearish side, the rapid 1.5% jump in 24 hours on August 1st means the pair could be overextended in the very short term, making it ripe for a pullback. Profit-taking could lead to a temporary dip, potentially retesting that 1.1550 level. Also, unexpected positive U.S. economic data or hawkish statements from the Federal Reserve could quickly reverse the current sentiment, as shown by historical sharp intraday drops in the 1-hour and 15-minute charts. For traders, it's vital to watch for sustained closes above or below key levels. Confirmation of a breakout or breakdown on higher volume increases the reliability of the move. Consider using moving averages to identify trends and potential dynamic support/resistance levels. Momentum indicators like RSI can also signal if the pair is overbought or oversold, indicating potential reversals. To recap the important price levels to watch, the immediate strong support is now 1.1550. Below that, consider the previous resistance levels around 1.1470 to 1.1500 as secondary support zones. On the upside, the current level of 1.15853 suggests the next psychological resistance could be 1.1600, followed by historical highs potentially around 1.1650 or even 1.1700. Our unbiased prediction is that the strong fundamental drivers and the decisive daily chart breakout favor continued bullish momentum in the short to medium term. There's a good 70% likelihood that EURUSD will attempt to consolidate above 1.1550 and possibly test 1.1600 and higher in the coming days. This likelihood is reinforced if upcoming U.S. inflation data shows a continued softening or if the Federal Reserve signals a more dovish stance. However, a short-term pullback to retest 1.1550 has about a 30% likelihood, especially if early Asian or European session trading sees some profit-taking. This would be reinforced if the market perceives the recent rally as too fast. What to look for? Keep a very close eye on upcoming U.S. economic releases, particularly any further jobs data or inflation reports, and any statements from central bank officials. These events are the primary catalysts that will confirm or challenge the current bullish narrative. Monitor how price interacts with the 1.1550 level during any pullbacks. A strong bounce would confirm its new role as support. And remember, adapting your strategy to new information is key in dynamic markets like Forex. That's all for today's in-depth analysis of EURUSD on Explain the Charts. Don't forget to like, subscribe, and hit the notification bell for more market insights.